Good morning and welcome to today's meeting. We have two topics on our agenda today, followed by an update on our EITF agenda. We'll start today with an update from our team related to our research project on accounting for and disclosure of intangible assets. And with that, let me turn it over to Erica to tee us up this morning. Good morning, Erica.
Thanks, Rich. Good morning, everyone. At today's meeting, the board will discuss comments received on two invitation to comments that were recently issued: recognition of intangible assets, which will be discussed first, and then financial key performance indicators for business entities. Broadly, these two staff documents were developed to solicit additional feedback on potential project objectives and scope as the board considers whether to add a project or projects to its technical agenda. The board will be asked to provide its initial views on the feedback received on these topics, but will not be asked to make any decisions today. At a future time, the board will consider feedback on these two documents, along with the feedback received on its agenda consultation invitation to comment, to decide if a project on intangibles and/or financial KPIs should be added to the board's technical agenda, and if so, with what scope and objective of these potential projects. We anticipate that the feedback on the agenda consultation invitation to comment, which includes stakeholder views about the relative priority of these topics and other topics, will be provided to the board at a meeting in October. And with that, I'll turn it over to Jill for intangibles.
Good morning. The purpose of this portion of the meeting is to discuss the feedback received on the invitation to comment, recognition of intangibles, which was issued for public comment on December 19th, 2024. Comments on that document were due May 30th, 2025. The board received 43 comment letters. All comment letters were reviewed by the staff and are summarized in the board meeting handout. In summarizing and reviewing the comment letters, the staff identified the following key takeaways. 1, stakeholder views on intangibles continue to be diverse. Comment letter respondents provided mixed views on whether the board should undertake standard setting efforts in this area, and if so, what types of intangibles should be addressed and how the issues should be resolved. Second, there is very little support for a broad reconsideration of the accounting for all intangibles with the objective of creating one comprehensive principles-based standard that consistently addresses recognition, measurement, presentation, and disclosure of intangibles. Comment letter respondents acknowledge that because of the many different types of intangibles, that the recognition of intangibles should vary based on the nature of the intangible, its stage of development, and how it was acquired. Third, many stakeholders provided feedback on aligning the recognition criteria for intangible assets acquired in a business combination, acquired in an asset acquisition, or internally developed. A majority of those stakeholders acknowledge that there are reasons why internally generated intangible assets are accounted for differently from acquired intangibles, and the board should not align the accounting for acquired and internally generated intangibles. In addition to the comment letter feedback, the staff performed supplemental outreach, including with investors and advisory groups. Investors provided the following feedback during our supplemental outreach. First, investors routinely make pro forma adjustments for amortization expense and impairments attributed to acquired intangible assets to improve the comparability of financial statements and reduce the volatility of earnings. Investors are generally comfortable with the current accounting requirements for R&D costs. Investors provided suggestions for enhanced disclosures related to acquired intangible assets, internally developed intangible assets, and R&D costs. Based on feedback from investors, it does not appear that they are interested in capitalizing internally generated intangibles. I'll now turn it over to the board to address the two questions in our board handout.
All right. Thanks, Jill. Certainly quite a bit of feedback, which I think was one of our main objectives on this ITC, given we've gotten a lot of conflicting input over the years. So a good tip. Any questions for the staff on either the feedback or comments related to next steps that we should consider? Anyone? So?
Is this for both questions?
Mhm.
Okay. So maybe I just have a few thoughts and some comments perhaps. I thought, firstly, I appreciate the number of stakeholders that actually responded to the ITC. I think it was a nice number that we got, as well as a broad spectrum of stakeholders that we got feedback from. I thought it was really interesting and helpful to read the variety of views that were expressed. And I think, certainly, Jill, you pointed out the differing number of opinions that are out there as it relates to how we should proceed. I think that, at least for me, one of the common themes that resonated was that there isn't a pervasive need to do a broad project. So I would support that sentiment. I realize we're not making a decision today, but at least in terms of, it doesn't seem to me that it should be a priority. And, I think, there were some respondents that provided feedback that talked about the spectrum of intangibles. And in particular, if we should go forward, like looking at it in a more targeted way, that is also a sentiment that I would support, really focusing on what the problem that there is to solve. And another area that you pointed out, Jill, was business combination and asset acquisition accounting, and perhaps some viewpoints there that the accounting should be harmonized, particularly as it relates to IPR&D. I would probably be interested in doing some more research there. It certainly seemed like we had perspectives on both sides that suggest that maybe it shouldn't be, and others that suggested it should be. Particularly, I think some of the letters that we got from the pharma industry particularly talked about IPR&D as an indefinite lived intangible asset in a BizCom, and whether that actually reflected the economics of the transaction, or whether we thought that it was consistent with asset acquisition accounting. So I would be interested in exploring that further. The other thing that resonated with me was really around research and development, and I was hoping we would get some good feedback on that as well. Again, people on both sides of the fence about whether development should be capitalized or not, but I think maybe we might benefit from some more research there on, if we were to provide more disclosure, say, for example, how would investors use the information, or what is it that they actually would benefit from? I'm open-minded to what we hear in that research in terms of either a change to the model or, incremental disclosures. And then maybe just a comment about, there was some respondents that talked about maybe as a starting point, doing disclosures more holistically as it relates to intangibles. I think just for myself, I would prefer a more targeted approach. I think that really understanding what investors might need and how they might benefit from it, considering the spectrum of assets that are within this category. I think sometimes requiring broad disclosures could be quite challenging to actually develop and to see how they might be used depending on what their industry is. So I know there's a few thoughts, but and I realize we're going to talk about this again as it relates to the agenda consultation and priority, but at least that gives you some idea of what I'm thinking.
Christine?
Yeah, I think in some respects, my thoughts on the feedback that we received are similar, not exactly the same, but similar to what Sue was just expressing. I do want to thank the stakeholders for taking the time to provide their input. And like Sue, I found it very informative to read the variety of views, and greatly appreciated the feedback because it helped to refine my own thinking. I agree with the stakeholders that did not support a broad project on all intangibles. There's a reason why we don't have one standard on tangible assets, and that's because the economics of inventory and the economics of property, plant, equipment are completely different. And similarly, I just don't see how it would make, how we could make progress in trying to come up with one standard for all intangible items, because the economics of software developed for internal use is completely different from the economics of holding a cryptocurrency for investment. And that's why I do think that the board has been taking the right approach in addressing classes of intangible items. Now, that said, I do agree with the stakeholders as well that said that we should be applying a consistent recognition and measurement framework to our development of standards related to intangible items. And we have that consistent framework. It's called the conceptual framework. And Chapter 5 provides the recognition principles, and Chapter 6 provides the measurement principles. And I think it would be a great exercise for the board and the staff to take those principles that are new. We just finished them, a couple of years ago, and apply them to a specific type of asset, intangible asset. So let's take research and development just as an example. The recognition principle would say, first of all, you've got to have an item that meets the definition of an asset. And then secondly, you have to be able to measure that item consistent with the measurement principles in Chapter 6. I think what we would find if we applied those measurement principles to R&D, that we would actually end up with different recognition outcomes depending on how the R&D was acquired. So for example, if the R&D is developed internally, we may get to the point where we can say, yes, we've met the definition of an asset, but it's no longer possible to measure the acquisition cost of that asset. So we would not be able to recognize. And I think we would end up in a place that's quite similar to where we are today. And maybe improving disclosure around those expenditures would be beneficial to investors. On the other hand, if we're talking about R&D or IP R&D that is acquired from another entity on a standalone basis or in a basket asset acquisition, well, in that case, when you apply the exact same recognition principle, you're going to end up, I think, in a different place. You're going to say, bought an asset, and I know what the acquisition cost is, and that should be recognized. Now, when it comes to IP R&D acquired in a business combination, that I would not take on if we were to do this, do this targeted analysis of applying our recognition and measurement principles to R&D, because we've heard from investors that because of the unique nature of the consideration that is paid in a business acquisition and the very unique allocation problems of allocating that cost to what was acquired is creating problems for them today. The fair value approach to allocation is creating problems for them when it comes to forecasting future cash flows after, a business acquisition. And so I think there's a much bigger problem with business combination accounting, starting with the model for allocating the acquisition cost, as well as the treatment of goodwill. And I don't think that those problems are unique to the treatment of IP R&D acquired in a business combination. So I would not try applying the criteria there. Finally, I do know that there are some stakeholders that believe that with internally generated R&D, if you can't come up with the acquisition costs, then maybe you should go to fair value. And if that's the case, then I think the board would have to talk to a lot of investors to understand how fair value measurement would help them to forecast the future cash flows from using the created IP in generating entity-specific cash flows. And then I would also want to understand from investors how debiting an asset and crediting a gain on recognition for all of the future profit that will be generated from that asset, and then amortizing that fair value over the life of that asset in a way that would essentially wipe out all future income except for present value calculations, would also help investors to forecast cash flows. If it does, I'll be surprised, but I'm always ready to learn. So anyway, I think what I would suggest is that if the board does want to do something on intangibles, we focus on a specific type and we start with our recognition and measurement principles and apply those consistently.
Okay, thanks, Christine. Marcia.
So like Sue, I want to thank our stakeholders that gave us some input. I'm not surprised that the input was so mixed. I think when we reach out on these topics, I think we learned a lot in the software targeted improvement that we did earlier, that this is a difficult area with very diverse views, and that came through. I won't repeat what's already been said by Sue or Christine, but I guess to add incrementally, I was not surprised to see the comments talking about maybe we should align accounting for an asset acquisition with accounting for a business combination. However, I can also understand that that may not be isolated to intangibles in those types of transactions. So on your question about where would board members be interested in some more work? And this may not fall to the intangibles team, but I think that every time we have an opportunity for someone to give us feedback, we consistently hear that this is a challenge in today's gap. Now, it's also interesting. We also hear, I like this model, apply this more broadly. I like the other model, apply it more broadly, which may be why we tend to get stuck and we never do anything any differently. But I personally would support, if we had the resources, spending a little bit of time on that business combination asset acquisition dilemma, taking and incorporating the feedback we received from the ITC as part of it.
Thanks, Marcia. Joyce?
Thanks, Rich. So I'd also like to thank the comment letter respondents to the ITC, as well as what the staff has compiled thus far. I agree with what you've surmised, and that is there's very little support for broad consideration to change the accounting for intangibles. However, there is a litany of recommendations regarding various types of targeted improvements that I think are worthy of research and analysis. In assessing those potential categories, I think that there are specific ones that you've identified in your board memo, which I'd just like to address very quickly. First, I'll start with the potential improvements to the definition of and the accounting for R&D. We heard from some comment letter respondents that we should consider updating the definition of R&D, given technology has evolved and it continues to evolve in today's environment. We received some very specific feedback regarding the activities within the R&D definition, notably related to scope exceptions that some stakeholders believe should be considered as activities, actually as R&D activities. And there's some sentiment that we should provide some illustrations and examples of those types of activities. On the investor side, there was feedback regarding very specific activities that are excluded from the R&D definition and ones that should be included. There's a need expressed by the investors to better reflect the emerging trends and the technologies. So in my view, as it relates to the definition of R&D, based on the needs that were raised, it appears that there is some common interest to perform some research and analysis in this space, very narrow, targeted suggestions that may help sharpen the view of R&D and how it is applied by preparers. These views that I mentioned, they were from practitioners, academics, investors, and preparers. So it is across different stakeholder interests. However, we want to take note, again, as Christine has mentioned, that investors stated that they are generally comfortable with the R&D accounting, and they generally use the R&D in their computations for return on invested capital assessments, and they're quite happy with the information that they're getting today, as well as stakeholders expressing that there isn't any broad interest in segregating development costs out of R&D. So I think we want to keep that in consideration as we look at the potential, as we potentially look at the definition of R&D. In addition, another category that was raised is regarding the recognition criteria for internally developed intangibles. And we certainly heard from a majority of the comment letter respondents that they do not support a project to recognize internally developed, for the recognition criteria to change for the internally developed intangibles. And as Christine has mentioned, investors have continuously mentioned concerns over time regarding the flexibility of potentially capitalizing additional costs incurred for intangibles as being undesirable due to the subjectivity, the judgment, and the estimations that would be involved. They already have established modeling techniques under the current accounting, and there's also some stakeholder feedback that suggests that the diversity in the nature of the intangible assets does not lend itself to addressing all internally developed intangibles in the same manner. So given the current utility that's expressed by stakeholders, in my view, there really is not an evident need to make changes regarding recognizing internally developed tangibles as one category of assets. Arguably, the multiple types of intangibles should be assessed distinctly, and the recognition and the measurement should be based upon the uniqueness of the intangibles, such as what we've experienced in our very recent standard setting. An additional category that was raised is regarding the alignment of the recognition criteria for acquired intangibles, whether through business combinations or asset acquisitions. It was pretty clear that a majority of comment letter respondents expressed interest in aligning the recognition criteria for the acquired intangible assets and acquired IP R&D in different respects, but there's a need, there's interest in doing research around those potential alignments. And they provide us with various recommended models, which I think are noteworthy for us to investigate as to the applicability for potential accounting changes. Some stakeholders basically expressed that there really is no compelling reason nor conceptual basis for the differences between the business combinations guidance and the asset acquisition guidance, given the economic similarities. And I think that's very important for us to take note of as we consider this. So based on the broad stakeholder feedback regarding the alignment, while, again, the recommendations may differ, I think that consideration should be given to performing further research and analysis to address the potential alignment of acquired intangibles and the potential alignment of and recognition and measurement guidance for the IP R&D. But quite importantly, which Marcia mentioned, I think consideration should be given as to whether it is more relevant and even cost beneficial to not solely address acquired intangible assets, but to broadly research the alignment of the existing asset acquisition guidance and the business combination guidance, likely in a project separate from intangibles. And finally, I'll just close out with potential improvements to enhance disclosures, the breadth of the disclosure recommendations, I thought was quite significant. We heard from academics that research suggests that the financial statements do not provide sufficient information about intangibles, and that research indicates that intangible intensive entities are more likely to emphasize supplementary disclosures to provide additional information to investors. So they're going outside of the required pool in order to satisfy investor needs, according to this research. Most of the investors, buy side and sell side, whom the staff conducted outreach and received comment letter feedback, specifically expressed strong sentiment for incremental disclosures, whether it is quantitative or qualitative, but they all relate to acquired intangibles, internally developed intangibles, R&D costs, and IP R&D. So I think that there's a lot of work or a lot of opportunity for work there, given the nature and the extent of the investor requests, as well as the academic research regarding the disclosure shortfalls. I think we have some opportunities there.
Great. Thanks, Joyce. Fred?
Thanks, and I also appreciate the input that we've received, and I'll try not to repeat other things that I agree mostly with all the comments that have been made so far. I would just say that it was clear in the comment letters that one-size-fits-all accounting for intangibles simply doesn't work, and I think a good example of that is recent intangible projects that we worked on or are working on. I think of software, I think of crypto, I think of the EITF's issue on mortgage servicing rights. I can't think of 3 more different assets, and each of those deserves its own, for investors, really deserves its own accounting, the appropriate accounting and disclosures. I am interested, I think, as a follow-up to a number of the comments on continuing to explore work on R&D. I think that I was a little disappointed that the amount of kind of mixed feedback we received about moving forward in our R&D. But I think a lot of that mixed feedback really came because there's a lot of folks who just don't want to see greater capitalization of R&D. So I do think that, listening to this, I think that I'd like to continue to explore R&D, but more narrowly defined on R&D. One would be a definition, because I think there is a definition issue that can be further explored. I think disclosures, and I think any adjustments, because we got a lot of feedback on IP R&D as part of that. So I would like to kind of see if we could explore further moving down a path in that direction on R&D. Thanks.
Thanks, Fred. Hillary?
Agree with many of board members' comments, and especially the one size fits all may not work here from an intangibles perspective. And I do think the feedback that we got from stakeholders was really helpful for being able to kind of work through all of that mixed feedback. And though there was a lot of mixed feedback, I do think there, as was mentioned by many board members, some pretty broad consensus related to a few things, right? Maybe not interest in a broad recognition and measurement project. I think I probably have a view of I'm not particularly interested in a broad disclosure only project either. I do think we heard from stakeholders that the approach that we have been taking, which is more incremental and focused on specific intangible asset classes, may be the appropriate approach. And so I would continue to be interested in looking at that and getting feedback from our stakeholders with regards to whether there are other types of intangible assets that require more specific guidance from a recognition, measurement, presentation, or disclosure perspective. When thinking about it from more of a disclosure standpoint, though, I will say with R&D, kind of similar to Fred, I do think with R&D, I have still some questions with regards to our definition of R&D, it seemed like people said it was operable and they can apply it today. But I think I'm interested in whether there's any disconnect between what investors think they're getting through the definition of research and development versus what is actually coming through in the disclosures for research and development. Right now we have a total for research and development costs, right, that has to be disclosed. But I think I have an interest in potentially looking at whether or not some additional disaggregation associated with that disclosure could be helpful and could help to ferret out maybe some of those questions of whether or not investors are getting the information they think they're getting through research and development, through the existing definition. And if not, is there something that we need to do there to make a potential adjustment? I also do have an interest with regards to addressing certain targeted improvements, for example, for acquired intangibles, but specifically in process research and development. So I completely take Marcia's perspective of, we received this feedback, not just with regards to acquired intangibles, but in just differences between asset acquisitions and business combinations. And while I think we certainly could take on a broader project on that potentially, I also, in the kind of vein of targeted improvements, I would potentially look at in-process R&D separately, because I maybe don't have quite as much confidence that we would be able in a short period of time to be able to address some of the broader issues related to disconnect between business combinations and asset acquisition accounting. And I do think that this is an area that we've heard should be potentially prioritized. So I would be fine with looking at that and a more targeted improvements approach. But certainly appreciate the feedback from our stakeholders and from our staff for being able to summarize a lot of diverse feedback. So appreciate that.
All right. So just a couple thoughts and echoing some of my board members' comments. I agree one size fits all for intangibles doesn't work. Any more than one size fits all for all assets doesn't work. We have different inventory guidance versus fixed asset guidance for a reason based on the nature of the asset and how it'll be used. And that doesn't necessarily bother me. I did think the software project was very helpful in that the team did an analysis under the conceptual framework of what an asset was and wasn't. And we made a decision, and I'm sure to the extent we do individual standards, I think that's something that makes sense going forward. The definition of R&D keeps coming up, and one of the challenges is the definition of R&D is used for both recognition as well as disclosure. What I hear, though, is that when investors look at it, they're focused on the definition for disclosure purposes, recognizing we didn't use the definition of R&D for capitalization in our software project. We picked different criteria. But there certainly seemed to be some elements that were being expensed there that would have generally, I think most investors would have viewed as R&D, but because they were scoped out of that, they don't go into that disclosure, and therefore there's really no insight into the SaaS company making investments that aren't capitalized for in their software versus the company that's marketing it for sale. So I think looking at that definition for disclosure purposes makes sense. I also wonder if there's a difference in view on the definition of advertising. There's an advertising expense disclosure today. I think I could read it broadly to say that should include marketing, brand promotion, company promotion, but I'm not sure that that is done consistently. And when you think of the value of these entities, a lot of the value is in the brands. I think it may make sense to look at that definition, understand how it's applied, and see if that's one of the areas where where there's significant expenses that aren't being captured by one of our disclosures that may be creating some confusion with investors. And the reason for those two comments is I didn't hear a real groundswell of support to put more assets on the books. What I did hear was understanding of the spend, and we have our DICE project coming, and I think that helps. When it comes to means of acquisition, I think it's kind of interesting. I would have taken some of the investor feedback to say, don't change what's capitalized in a business combination because I have enough information to undo the accounting. That doesn't sound like a real ringing endorsement for the accounting to me, but I understand that's what we heard. They can back out the amortization fairly easily. I do think we have confusion, though, because we have a whole set in the cod about assets. We have guidance on inventory. We have guidance on all these assets. And then we threw in a little guidance on asset acquisitions, which generally talks about cost allocation, but also has some guidance where it creates intangibles unique in an asset acquisition versus internally developed. And a line between internally developed and an asset acquisition for something in process is awful. I don't even know how you determine it. Did you outsource to Tata Consulting, your coding or something versus you bought it partially coded? Does that really make a difference? To me, those are all asset acquisitions. It's just a matter of one was in a bunch of little chunks and one was in a larger chunk. So I think there's probably something we need ultimately to do there, because my concern is in practice, people think of asset acquisitions and somehow jump to BizCom guidance. And I don't think that should be the case, because drawing that line, I think, is arbitrarily drawn in some cases. So whether part of this project or another, I think there's room there. And then finally, moving on to BizCom. Well, ultimately, a BizCom allocates cost. It allocates cost by a plug to goodwill or negative goodwill. Every asset and liability has to be independently valued in accordance with the standard at fair value or otherwise. If you think about in-process R&D, there's an independent fair value determination. You could do that at any point in time for any internally developed intangible. So to argue that you couldn't do it for internally developed, but you can do it in a BizCom, I don't think it holds a lot of substance. It's the same valuation model. So that then leads you to, why are we putting in process R&D on the books? I went back to the basis of conclusions, and all I could find was to align with international standards. I didn't hear a real great reason for why that change was made at the time. I think people are pointing it out, that there's a question about that. And when you look at these post-acquisition results, that's the amortization that people are backing out, ultimately, or the impairment that they're backing out. So I do question the value of that, not necessarily the value of identifying what consideration you estimate you've paid for it, but more along the lines of the value of that subsequent accounting. So I do have a question there. So I'd probably be interested in that. Whether that's here, I would actually like a broader relook at BizCom, but I don't know if we have that case or not. I certainly heard enough about this subsection of it. Okay. With that, I think we got a lot of input for our staff to consider. And as Erica mentioned, we'll bring this back as part of the overall agenda consultation with lots of other great input that we got, and give us a chance to decide, is this one of the priorities we have? And if so, is there a scope that we think we can agree on? And we can also agree on seeing through to conclusion, which I think would be pretty important too. So with that, do we have a little change in staff for our next topic? Okay. Thank you very much, team. We'll see you again.